Okay, let's start with final accounts of manufacturing concern. First question, the trial balance of Ketan on 31st December 2023 is as follows. Now, first what we will do is we will read the question and then make the markings like what will go to manufacturing account, which item will go to trading account, profit and loss account, and balance sheet. The four things we have to prepare in manufacturing concern: manufacturing account, trading and profit and loss account, and balance sheet. First, we will look at the question. Debit side and credit side. Debit side, all expenses and assets. Credit side is all incomes and liabilities. First, we'll look at debit side. Opening a stock of raw material, raw materials used in factory, whatever is used in factory will go to manufacturing account. Work in progress, again manufacturing. Finished goods will go to trading, where we will sell this. Sundry debtors to balance sheet. Carriage on purchases, raw material is not mentioned, but still we will put it in manufacturing. Bills receivable, balance sheet, it's an asset. Wages is an expense. Wages is given to the workers, factory. Salaries to the employees will go to profit and loss account, P&L. Telephone charges, P&L. Postage, P&L. Repairs to plant, plant is plant plant which is used in the factory. So it will go to manufacturing. Repairs to office furniture, office already given, so it will go to P&L. Purchases, manufacturing. Cash at bank is an asset, balance sheet. Plant and machinery, asset, balance sheet. Office furniture, this will go to balance sheet, asset. Then factory rent, mentioned factory, manufacturing. Office rent relating to office, P&L. Lighting, lighting can be there in factory as well as in the company as well. So we will see whether there is an adjustment on it or not, and then we will accordingly mark it to manufacturing or P&L. General expenses, P&L. Anything general, we'll put it in P&L. Now we'll look at the credit side. Sundry creditors, liability will go to balance sheet. Bills payable, liability, a balance sheet. Sale of scrap, manufacturing will generate income by selling the scrap. Then commission, P&L, income. Provision for doubtful debts, this is known as old RDD. Trial balance RDD is always a old RDD. Then capital account will go to balance sheet. Sales in the trading account. Okay, now let us look at the adjustments. Now, adjustment number 1 talks about the closing stock of raw material. All adjustments will have two effects. All adjustments, all additional information adjustments will have two effects. Closing stock, that is raw material, already we know raw material, where we have written raw material will go to manufacturing. Work in progress, manufacturing. This is trading. So all the closing stocks we will mention here. There are two effects. One, first effect to manufacturing. Second effect, it will go to balance sheet. It is our asset. Then finished goods also will go to trading. And second effect will go to balance sheet. Semi-finished goods are WIP. Semi-finished goods, WIP also known as semi-finished goods. This will also go to manufacturing, and will second effect will go to balance sheet. The first one is done. Now we'll come to the second one. Salaries unpaid. Unpaid means outstanding. Unpaid means outstanding. That is for the year ending. Still, they were not being paid. That was rupees 1,000. So this belongs to this year. Now wherever we have salary, there will we will write number 2 because we will have to add it. So where can we find salary? Salaries is here. Just so salaries, what we will do is salaries, we will make marking number 2. There is an adjustment number 2. in salaries, that is outstanding the salaries. So first effect will go to P&L. And what about the second effect? It will go to balance sheet because it's a liability which we have to pay. So we will mark here and keep first effect to P&L, and second effect we will write it in balance sheet. Liabilities side as outstanding the salaries. Same for the wages as well. Wages are also unpaid. We'll make marking to wages as number 3. So where are wages? Wages will make number 3. Wages we write in factory. So first effect where we will go, this is also outstanding. So we will write this first effect in factory, that is manufacturing account, and second effect will go to balance sheet liabilities side because it's outstanding. Then coming to the fourth one, machinery is to be depreciated. On machinery, we will have to charge depreciation. We'll see where is machinery and we'll mark number 4. So machinery, we can see here plant and machinery, number 4. And what we will do is, acha, this is mentioned as plant and machinery. Plant and machinery. So what we will do is now, on plant and machinery, we will make working note number 4. First, machinery is in factory. So first effect will go to factory, that is manufacturing account, and second effect will go to balance sheet. Balance sheet from machinery we have to do less this depreciation. We'll see how it is done. Balance sheet, machinery, less depreciation. Two effects are done. The fifth one, office furniture is to be depreciated by 5%. Office furniture, first office furniture is in, will put in P&L, and the second effect will go to balance sheet again, less from office furniture. So office furniture will make marking number 5. Office furniture marking number 5. Then coming to the next one, provision for doubtful debts is to be maintained. Provision for doubtful debts. Debts are because of the debtors, and on that we have to make 10% provision. This is known as new RDD. In trial balance on credit side, we have seen old RDD. So this one is our new RDD. This was old RDD, and now what we see is the new RDD, and it has to be put to the debtors. What we will do is we'll mark debtors and keep. Debtors will mark as number 6. We have to make a provision of new RDD. Okay, we will see how later on it is being made. So just write and keep your new RDD debtors. Then last one, lighting is to be divided between office premises and factory. So it is saying that which this one was their lighting, adjustment number 7. This we have to distribute between office. Office means P&L, and factory means we have to put it into the manufacturing. So in office we have to put 300, and in factory we have to put rupees 1000. So we will see how later on it is to be charged. Okay, I think all markings are done. All 7 markings are done. Now we will move on how to solve this sum. Okay, line wise we will go. Like first raw material, then work in progress, finished goods, sundry debtors, and so on. First adjustment, first item of trial balance on debit side, raw material. We have written here, it will go to manufacturing account. So first we will write here we should always write relating to raw materials as to raw materials consumed. To raw materials consumed. In raw materials consumed, what we will write now? In raw materials consumed, we should write first raw materials. Raw materials 23,000. That is opening stock. This is opening stock. Opening stock. Given as this one, opening the stock, given as 23,000. We'll put here 23,000. 1000. Now this is done. Next, what we will write is, we have to write here, for next we will write about work in progress. Always after raw materials consumed, we should leave around like 5 lines and then we should write 1, 2, 3, 4, 5 lines and then we should write here. 2, opening the stock of work in progress. 2, opening the stock of WIP, that is work in progress. What is given? There is no adjustment or anything. There is nothing we have to add. So write it in the outer column, 10,000. So next we have finished goods. Finished goods are to be returned in the trial balance. So second we have here is trading and profit and loss account. Here what we will write first, to opening the stock of finished goods. To opening the stock of finished goods. To opening a stock of finished goods. Outer column we will straight away write, that is 15,500. What is given here? 15,500. Next, what we have is sundry debtors. So sundry debtors are to be mentioned in the this thing in the balance sheet. So there is an adjustment also on sundry debtors, which we will see. We can write here sundry debtors or debtors inner column, because there is an adjustment over here. Just a minute. This is assets and this is known as liabilities. In assets, we wrote debtors. Debtors have an adjustment. So in the inner column, we will write the amount of debtors, 27,000. On debtors, we have an adjustment which we saw here. On debtors, if you see adjustment number 6, provision for doubtful debts to be maintained at 10%. So in debtors, what we will do is less new RDD less new RDD at the rate 10% at the rate 10%. So it will new RDD at the rate 10%. So what is new RDD? On 27,000, we will find how much is 10%. So 10 gone, it will be 2,700. 2,700. So 27,000 minus 2,700, that will give us 24,300. Now, adjustments have two effects. So this new RDD has to be returned somewhere. That is in the P&L. Now we will go to P&L and mention there in P&L, we have to write it. Acha, for trading and P&L is together. So trading account, always you should leave around some 7 lines. So 1, 2, 3, 4, 5, 6, 7, 8 lines. So then you write here 2. How we will do the adjustment on this, we'll see that. We will write here 2 new RDD, which we just saw, that was 2,700. And then what we have to do is less old RDD. Always we have to do the same. Old RDD, which was given in the trial balance. If we see in the trial balance, old RDD was being given on the credit side. Old RDD provision. This is old RDD. That is 1,650. 1,650. So this has to be minused. So what will remain here is After doing less, what is the amount left? 1050. So two adjustments are done for new RDD. 1050. Okay, now this is also done. Debtors are done. Now next we will see carriage on purchases. It has to be written in the manufacturing account. We'll come to the manufacturing account. We'll come to the manufacturing account, and then we will write here in manufacturing to carriage on purchases. To carriage on purchases. To carriage on purchases. What is the amount for carriage on purchases? 1500. Okay, done. Then coming to bills receivable. It has to be written in the balance sheet. That's on the debit side. That means it's an asset. So we will write here bills receivable. Bills receivable. Bills receivable. Bills receivable 18,000. Next, wages. Wages has to be written in the manufacturing account. It is relating to factory, so it has to be written on wages, but it is having an adjustment number 3. We will see what is it. We'll first mention your two wages, inner column, because there is an adjustment 12,000. We'll see what was the adjustment. Adjustment was something really, something saying outstanding. So wages unpaid for December 2023, rupees 3,000. That was outstanding. Unpaid means outstanding. So we will write here add outstanding. How much is outstanding given? 3,000. So 12,000 plus 3,000 will give us 15,000. This was one effect. Now the second effect will go to balance sheet. It's a liability which we have to pay. After leaving around, we have to leave here around lines like 4 lines. Four lines always you should leave in liabilities aside. 4 to 5 lines, and then we can write here outstanding wages. Outstanding wages amounted to rupees, outer column we will write 3,000. Now this is done. Now we're coming to salaries. Salaries will go to profit and loss account. Here we will write in P&L to salaries, inner column 10,000. We see there was something add outstanding. This is also unpaid. Add outstanding. Outstanding amount here. Salaries unpaid for December 2023 was 1,000. We will add this. The total will become 11,000. Second effect, same like wages. We'll write here outstanding salaries 1,000. Done. Then we have telephone charges that we will write in profit and loss account. We'll come to P&L. We will write here 2 telephone charges. No adjustment, so outer column. We can put the amount in outer column 500. Next we have is postage, that also in P&L. So all is relating to company and not the factory. To postage 500. Next is repairs to plant. Plant is in the factory, so it will go to manufacturing. So we will write here in manufacturing 2 repairs to plant. 2 repairs to plant. To repairs to plant, if we see, to repairs to plant 1,200. Then office furniture. Office, anything relating to office will go to P&L. We'll write here 2 repairs to office furniture 600. 2 repairs to office furniture 600. Then we have purchases which will go to manufacturing. In opening the stock, now what we will write is purchases. In opening stock, we have written raw materials. So we are purchasing basically the raw materials. So in raw materials, we will write purchases. Purchases. We'll put the amount of purchases, that is 1 lakh. Total we will take here 1,23,000. Still in inner column, because there is an adjustment also in which we have to do less, that is raw material of 15,800. We'll write it later on. Now after this, what we have is cash at bank. It's an asset. We will write here cash at bank. Cash at bank amount, outer column 12,000. Then we have plant and machinery. Sorry, I had to put it here. Plant and machinery. There is an adjustment on plant and machinery. Plant and machinery amount is 90,000. There is an adjustment which is talking about depreciation. Less depreciation at the rate how much? Depreciation on plant and machinery is number 4, 10%. At the rate 10%. So we will write amount over here at the rate 10%. 90,000 is 10%. 10 gone, it will be 9,000. We will write here 9,000. 90,000 minus 9,000 will give you 81,000. Second effect we have to show of depreciation, that is in profit and loss account we will be writing. Acha, machineries, this thing depreciation, machinery is used in factory. So second effect of depreciation on machinery will go to manufacturing account. So we will write it over here. To depreciation on machinery amount was 9,000. Done. Then office furniture will go again to the balance sheet. We'll write here office furniture. Office furniture's amount 9,000 less depreciation at the rate 5%. So on 9,000 we will calculate how much is 9%. On 9,000, 5% is 450. So 9,000 minus 450 will give us 8,550. Second effect will go to profit and loss account, because office furniture. So office related, that will go to P&L. So to depreciation on office furniture depreciation on office furniture, we can write here amount was 450. 450. So this is also done. Now coming to the next one, factory rent, that will go to factory that means manufacturing. We will write here to factory rent. To factory rent 1,250. Then we have office rent, P&L, to office rent amount 3,750. Then we will go to lighting. Lighting has an adjustment which says the bifurcation of lighting. Lighting to be divided between office and factory. Lighting to be charged to office premises rupees 300. Office is P&L. So we'll write here to lighting. For office premises, it is set 300 lighting. And for factory, lighting is set as 2 lighting 1,000. Okay, just a bifurcation was given. So this is done. Then coming to general expenses, general, so it will go to profit and loss account. To general expenses, to general expenses, 1,600. Okay, the side is done. Now I'll come to the credit side. Sundry creditors, balance sheet, liability side. We'll come to balance sheet now. We will write here creditors, no adjustment, nothing. Creditors amount, outer column, 17,000. Then we have bills payable. Bills payable, outer column, 8,500. Sale of scrap is to be written in the manufacturing account. It's an income for us. So we will write here, leaving two lines we will write by sale of scrap. Sale of scrap amount is given as 1,500. Then commission income, that will go to P&L. We will write here in P&L by, acha, leave two lines here also. We will write here by commission. Commissions amount in the outer column, 350. It's an income. It is to be written on the credit side. Provision for doubtful debts are already done. Capital account in balance sheet we will write capital account. Liability side, on the first line always it is to be written as capital. Inner column, because profit or loss, whatever it is, we have to do the additions over here. Capital we will write 1,09,700. Okay, 1,09,700. Then last is sales. Sales in trading account. We will write in the trading account by sales. Sales always to be written in the trading account by sales amount 2 lakhs. Trial balance, all items are being posted. Now coming downwards to the additional information. Now first we will look at raw material closing. Raw material, we have written opening raw material in manufacturing. So see, raw material has to be written in the manufacturing account. It's a closing the stock. Whatever given is in adjustments is closing stock. In trial balance, it was opening the stock. Raw material, here we have written opening the stock of raw material. So now where we are going to write about closing stock is below this. We will write for raw material less closing stock. Less closing stock of raw material. Closing stock of raw material 15,800. So we were having 1,23,000. Now we will minus 15,800. So the amount which we will get is 1,07,200. 1,07,200. And the second effect will go to balance sheet. It's an asset for us. We will write here closing stock in that first we will write raw material, which we have just written. Inner column amount we will write of raw material 15,800, or outer column also we can write straight away. So we'll put here 15,800. Done. Now we will talk about WIP. Achha, second is given as finished goods. So finished goods we have written in the trading account. To opening the stock of finished goods. So closing stock will also come here. After sales we will write by closing the stock of finished goods. By closing stock of finished goods, amount is given as 18,200. Second effect will come in balance sheet below raw material, finished goods, outer column straight away we can write 18,200. This is also done. Third one was semi-finished goods, that is WIP, which we have seen here as to opening the stock of WIP 10,000. So closing stock will come over here. So in closing stock, what we are going to write is, so we can write it here. This is whole manufacturing account only. By closing stock of WIP, that is work in progress, what is given? 7,000. Second effect, again to the balance sheet, we will write here WIP, work in progress, amount is 7,000. Then first adjustment done. Salaries we have already done. Salaries is already done. Both effects. Wages is done. Machinery done. Office furniture done. RDD is also done. Lightening is also done. So all the adjustments we have given effect. Now what we have to do is, we have to see whether we have a debit balance or credit balance in manufacturing account. If we see, we will have the total of debit side will be more. So first take the total of the debit side. We will take the total of the debit side and then we will minus all the credit side items. We'll have a debit balance over here. $1,46,150. On both the sides, we will write the same amount. 1,46,000. $1,46,150. Now we will minus 7,000 and 1,500. Amount which we will get here is 1,37,650. $1,37,650. We will write here by this amount we will transfer to our trading account. By trading account, below that we will write cost of production transferred. Cost of production transferred. Now this thing we will carry to the trading account. This was on credit side. We will write this on the debit side now. We will write below opening the stock of finished goods. We will write to manufacturing account. That amount has to be put here. To manufacturing account. To manufacturing account. Below that we can write in the bracket like what was mentioned there. Cost of production transfer. Cost of production transfer. Cost of production transfer. What was the amount which we got here? 1,37,650. That we have to transfer over here. Once it is transferred, now we will see again which side is more. Now, mostly there is a credit balance. So we will write here. Okay, we will write here the total. So it will be 2 lakhs plus 18,200 is 2,18,200. 2,18,200. Okay, copied. This side also we will write it. Now we will see we have a credit balance. So whatever is the balance, first we will see that balance is 65,050. 65,050. minus from 2,18,200, 15,500 and 1,37,650, we will get 65,050. Now this amount has to be transferred to the profit and loss account, and this amount which we get is known as to gross profit. To gross profit. If debit balance would have been more, we would have got the amount on the credit side and we would have set it as by gross loss. So this side we call it as gross profit and we say it will be carried down to the profit and loss account. Now this amount has to be carried to the profit and loss account. So I will write here by gross profit brought down. By gross profit brought down. So this amount now I'll write it over here. Now again we will take total whether debit side is more or credit side is more. I think again if we see the credit side is more. So we'll say there is a credit balance. 65,050 and 350. Here I will write my total of this side 65,400. Same on this side also 65,400 on the debit side. Now we will minus all these things from here till here and we will get a balance over here. The balance will be 45,650. This we call it as net profit. If we would have got the balance on the credit side, that side we would have said it as by net loss. So this is to net profit. Again, that is 45,650. So this has to be carried now. This amount has to be carried to the balance sheet. We will write below the capital. Add. If it's profit, it will be added. If it's a loss, net loss, it will be less. So add net profit amount which we got here of net profit 45,650. 45,650. We will add this both capital and net profit amount we will write here. That is 1,55,350. 1,55,350. Now when we take total of this, that is liabilities aside, we will get 1,84,850. We will take now total of asset side. This total will be also be 1,84,850. If both the sides match, that means the solution is right. Balance sheet should tally. Okay, this is manufacturing account. Then we have seen trading account, and this is profit and loss account. So I will make a bifurcation here. Okay. This is trading account, and below this we have your profit and loss account. This is profit and loss account. Then this is balance sheet. Balance sheet must tally. Okay, this is done now. We will meet in the next lecture where we will see the question number 2. If any doubts, please post it in the comment box.